Good afternoon, everybody. Welcome to 12-Minute Trading. My name's Doc Severson. I'm joined by Dave Lukas. Today is the 2nd of February in 2026. So Monday, February 2nd, and markets are up again. They seem to be down, then up again, then down, then up again. We've been unable to see the S&P break convincingly above 7,000. I think that is the big barrier for us to get to. Also, think the Dow is like inches away from 50,000. That is a big number that is going to be trumpeted out there with, hats and kazoos and all that stuff on CNBC when that happens. But we'll see. It's like every time everybody gets super bearish about this market, the dip gets bought. So we're just waiting. So we've been actually waiting in the range since really the market topped out around October, and we've been unable to really break convincingly above that. So that's actually good. The market's doing the hard, heavy lifting right now, getting ready for the next move. Which way is that going to be? Probably to the upside, but it never takes the easy path. Dave, what are you seeing out there?
Well, it's Groundhog Day again.
Yeah.
Everybody catches that reference. So I'm staring at like 20 inches of snow on the ground. It looks like we got more winter on our way, but I don't know if it's winter for the markets. I think I would be surprised. I was just looking before we jumped on here, but I wouldn't be surprised if we did not try to tag 7,000 again by the end of today, have a push in the final hour here and see if we get up there. Now, this thing has been in this range, gosh, like you said, since October, and that's a pretty big base. A lot of times, the longer it goes without being able to break out to the upside, you're going to say, hey, there's a better chance maybe it breaks to the downside. But I mean, you look at everything that's been thrown at this market over the last month, right? So you've got, just tariffs like that just come up on the weekends. You've got a new Fed chair as of last week. You got potential war with Iran. You got like all these things. The Fed holding rates steady. All these things that presumably are negative for the markets, but yet this thing stays in a 2% range and keeps getting bought up anytime it goes down about 2%, right? So there's a lot of strength in this thing. You're seeing some liquidity raising, I think, partially in crypto. I think that's some of the reasons that you're seeing crypto get beat up, that liquidity is moving. I also think the gold and silver rallies have taken away from some of the crypto as of late, although they're giving back up a decent amount of that. So, and then you got the S&P starting to get going again. So I think right now it all depends on this. We've got a squeezing chart. We've got full energies on the daily chart and the weekly chart. And like, it's hard to be patient and let this thing reveal its hand. But at some point here, we're either going to break above 7,000 and go, or we're going to break down. I know that sounds like duh, but it's the patience to wait to really see it reveal its hand before you put a lot of capital to work right now. I think that's the number one thing you can do with where this market's at. Like you said, I think too that the upside's still favored based upon this, but we're also getting into a seasonally weak period of the year. So we could get a fake out and then get sold off. So just be patient. Let this market tell you which way it's going to go.
The thing that we're always trying to determine is how to spot a top. And I think spotting a top in the market is probably the biggest fool's errand that's out there. I've been doing this for over 20 years now, and I've never been able to reliably spot a top. Like you see all the false prophets that are out there on social media everywhere, like, oh, the sky's falling, like book this text. Yep. And it's going to be, we're going to see a crash. Like, yep. You wouldn't believe this. Like this weekend, actually, I saw more
people
FUD
saying, yeah, there's a crash going to happen. It's imminent. Watch Monday.
Yeah, Black Monday, and more FUD that's out there these days. And the one thing that prevents me from joining the crowd is the price action. Mm-hmm. Whenever we see a market top, generally what happens is we will see very unstable price action leading up to that point. So we did have some of that back in mid-October. If you
Yeah.
remember, we added that October 10th where Powell came out and said, oh, we don't necessarily need to cut rates again, which was a big surprise to the market. Didn't
Yep.
like that. No assets really. So that started a little bit of volatility, and that kept into as I look at the 1st of December. So we had about 6 weeks of pretty heavy volatility, and that could have tipped it over the edge, but it
Yeah.
didn't. We got into
Right.
December and we got into the Santa rally and all that stuff, and everything smoothed out and everything settled down. And it's been that way since. We call this character quiet and trending character.
Mhm.
And that by itself to me is the biggest tell that probably, even if we do see a quick dip based on some exogenous news, ultimately I think we're going to be breaking above 7,000 and we will have money chasing after this market yet. We've still
And you look
not
at
got to the point of that euphoria to
yeah, you
me.
look at the last 3 weeks, and we've seen that. You've had about a 2% dip, get bought back up, a 2% dip, get bought
Mhm.
back up. Again, still going nowhere. And you're famous for saying, I think it's important, is that um, tops are a process, bottoms are an event, and it's really true. Tops, like you said, there's a lot of noise that starts to happen before they really give way. Where bottoms are typically not so much V bottom, but they're an event where they stop and then they start to turn and really cement that. It's easier, I think, to call a bottom than it is probably a top even.
Oh, much
But
easier, especially in the context of a much larger uptrend.
yeah,
So, when that's where people get hurt is during actual honest to God bear markets where every local high turns out to be a selling opportunity. And we
right.
we really have not seen one of those. A lot of people call like the COVID area, oh, nasty bear market. That was just a full on correction. That was like a 30+% correction.
Yeah,
We honestly did have a quick and dirty bear market in 2022 that was pretty
yeah,
much over 9 months into it. And then we
yeah,
started the process of healing after that.
right.
But it's all the local highs get sold and it will just beat the stuffing out of you. But we haven't seen anything at all like 2008,
Right.
or actually to some degree it was worse back in 2000 to 2002 because it was 3 years long of that stuff and it just wore
Yep.
people out, and we
Right.
have not seen that. And that is probably to some degree a statement more about the what quantitative easing and all this loose money policy does, because there's so much money sitting in the sidelines you
Well,
know
that's the thing I think we need to be on top of and aware of. It doesn't matter yet, but Warsh is a hawk. I don't care what anybody says. His historical, view, his historical actions, and but he's Trump's kind of hawk. And we'll get in the charts in a second on those guys, but I think this is important to remember. Now he doesn't take over for a few months, spring, early summer, and then the first meeting with him in charge probably be what, July, maybe June. I have to look at the calendar. But I think the important thing is that he probably will cut rates. Now that seems weird for being a hawk, right? But he probably will cut rates because he understands that the real inflation, the way that the Fed calculates, it's a joke. And so if you look at trueflation, we're like under 1% now,
right.
right? So he's I think more in tune with that. But he also is not a QE guy. And he does not like the Fed having trillions of dollars on their balance sheet, and he's going to get rid of that. So that's liquidity that gets pulled out of the market. So it's kind of like we'll help Main Street while sacrificing some of Wall Street to get there, and that's okay. And so we'll see once he takes over what the policy actually is or how it starts to proceed. But that's something that, I don't know if markets will get ahead of it. They may just party on until that happens, and then we see some corrective action. Usually the market's forward looking, but maybe they don't know yet. But that's something to be aware of for your new Fed chair that's coming in middle of the year here. And so it's not bad. It's just it may give the market may be more subdued because of that, because you just don't have the liquidity that's being pumped in and just given to the markets, right? So
So Dave, how do you see the oncoming midterms affecting markets later on this year?
it again, you won't know till you get closer to it, right? Until the market has a good read on what's actually going to happen. Um, I will say that there's going to be a lot of things pulled out to make this economy look good or feel good ahead of it. Whether it's Republican or Democrat, they do this stuff. But Trump is going to campaign like he's running for president, which is not something you typically see a president do during that time, because he's going to want to control that narrative and
Oh,
stuff. And so,
I
I
remember
mean,
8 years of Obama, and
yeah.
that's all he did.
Right. So we didn't get that. Well, Biden was barely functioning, but we didn't get that. So now though, I do think that we will see him out there a lot more. I think you'll see a lot more action being done, that sort of thing, to make things look really good and feel real good ahead of the election. This is and again, it depends on what you believe on what was really happening. And if you do believe that Trump really is trying to really fix this thing for the future, and really trying to upend 40, 50 years of the global economic environment and change it back to more of a not non-globalist nature, then phase one was, actually got through pretty well, which is like cutting the size of government. I mean, you would think the job reports would be so much worse. You're
Hmm.
cutting hundreds of thousands of jobs from government, but they haven't been that bad. Now, I just saw today that they're not going to release the one on Friday, which is typically the seasonal adjusted one that has all the
Oh,
stuff in it. So I guess government holiday or something,
well,
they're not
we
going to release it.
aren't we in shutdown right now?
Well, yeah, I guess we are. So that's why right now they're not going to release it. Maybe that bodes well. Maybe it's just because we're in shutdown. But I mean, but if you look at everything that was done over the last year, the tariff side, getting countries to start, really kind of paying up, doing that stuff, rehoming things. And he touts all the time, 20 trillion, 20 plus trillion coming back to the US. I don't know if you saw the manufacturing data today, but that was really, really good. Best read in a long time. So, like, if the goal is to bring it back and have America be a manufacturing and a economic powerhouse, truly from the productivity of the private sector, a lot of what's been done has kind of laid the groundwork for that. And then phase two should be then, okay, lowering rates, growing the cash flow, growing the GDP, helping people prosper. And so we'll have to see if that kicks in this year.
How
So,
serious do you think he is about the dividend that he's willing to pay back?
I
He's
mean,
like I saw like
two
$2,000. He's
thousand
talking.
dollars a person.
Yeah.
So again, who knows, right? I mean, politicians love to throw money at people for votes. So whether it's Trump or anybody else, right? So it's who knows what'll happen on that. I do think, though, as we get into tax season, another month or so, we're going to start seeing that the refunds are substantially higher. People have more disposable income. That will help the economy. So you can kind of see there's like these injections. So if I'm him, I don't want to do it then. I want to do it later, right? Let's do that dividend in the fall, right
Right.
before,
Right.
right? Let's get that money going. So, like, there's probably a strategy to it if I'm going to do it. So, but again, if our debt keeps climbing like it is and it doesn't start to reverse, all you're doing is just blowing money and, creating,
You're just getting
more.
velocity of money. That's
Yeah.
it.
It's all it's fake is what I'm saying. It's not real growth. So, all right, let's jump in the charts.
As you wish. All right, let's look at the S&P. So let's see. You know, yell out if you see anything happening here. But I mean, seriously, we're now 3 months in a row to the upside, and that was after only November was a slightly negative month. After we've been basically climbing. This thing has been it's tagged on another 40% since the April lows, another
Yep.
40%, which is kind of amazing that we've never had a 10% correction during this time. I think the biggest that we had was what, 6%, something like that. and that was back in November. And I think the NASDAQ got to 8 or 9%, somewhere in that area. And the NASDAQ is actually the best set up to rip from here. So we have the NASDAQ is basically in a great position to pick up the ball and run with it. Look at the monthly energy now is really good. And that is a beautiful ascending triangle pattern on the NASDAQ. Looking at break above 26,000.
We really got it across the board. Daily charts are charged up, weekly charts are charged up. And on the S&P, it looks like it's starting to release today, maybe to the upside. But again, that's why I say until we get over and hold 7,000, I'm not going to count it. And it's kind of the same thing with the NASDAQ and even the Dow. Until we get over these levels and hold it and really, cement that, it's tough to say, that's where we're going, and that's where that energy's going.
I find it hard to believe that during the first quarter we can't see a Dow that runs over 50,000. Now, could that mean that it's going to run into trouble after that? That is part of our concerns, is that as we get into the end of this year, that this is where we're going to start to have a lot of volatility coming into play through things.
It'll happen before that, because they're not going to want it to happen ahead of the election. So it's going to happen. I predict when the weekly energy, if we go higher, if we really do release higher, when that weekly energy gets exhausted, is when we're going to see it. That's and I bet you it's like a June time frame. June's notorious for the first half of June getting pummeled. Some exogenous event doing that, right? And so like that, we could release starting, in the next few weeks. That would take you for a couple months and everything, if it wants to. And then, June, it just, you get that nasty correction, and then it's off to the races again. You maybe get a little bit of that August into September swoon, and then it's, game on for the fourth quarter.
Or we get the old sell in May and go away kind of thing.
You could get that too. I just think that the big correction for the year's, if it's going to happen, I think it's going to happen in the first half of the year. Let's put it that way.
Interesting.
And maybe a 5 to 10% if we're going to get it. That will be such a great opportunity if that happens.
Oh yeah, absolutely. Oh, by the way, if there's, we do have a number of people that have joined us live here today. So if you guys have any questions, anything that you want us to cover, as we are chatting about markets here, we're more than happy to bring up whatever chart you want to. Or if, like most of you, if you're watching this on a replay, if you want to post a question for next week's session, we'd be happy to take that. Just email us, support@12minutetrading.com. All right.
Doug, pull up gold and silver, or we can show that real quick. There's a pattern here, and I think it's important to, because both you and I took a position on silver today. And so this is a normal thing. The way that the gold breakouts have happened, you can see it, is that gold has this massive parabolic move, gets extended, and then it typically pulls back to around the breakout zone. And then that's where it finds support. And then, goes sideways for a while, has the big breakout, pulls back to that zone, same thing, right? So gold very quickly has gotten to pretty much the breakout zone. So, if you're liking gold, this is maybe a time to start dabbling a little bit, looking at that. Silver is really close too. So silver is definitely, you'll see it. It's very clear on the charts. On these, where these breakout zones are. Look at that. See that consolidation in the right about 55 to 60 on SLV. And so it's pulled back to 70 something now. So that may be it. It could probe a little bit deeper, but getting silver in the 50s. So you could sell puts in the 50s, the high or mid 50s right now, and probably get a couple percent even out 30, 45 days, because you got some volatility that's helping you. Those are your good entry points of things to look at.
Yeah.
So,
in the room, we sold the $61 puts this morning to take advantage of that. So again, it's aggressive move. You're catching a falling knife, but in the context of a trend that's this good, it's not bad to catch the falling knife if you can get close to the breakout level. And, quite honestly, getting assigned at 61, great, bring it on, because eventually, even if this does crash back down, you will get some type of relief rally, even if this is heading for like that. This is typically that ABC type correction that you see. So I wouldn't necessarily trust the first bounce back up. A lot of times we'll get a retest of the bottom for that, but this is certainly something that we could take a trade or even take assignment down in the lower 60s is fine. But, the problem is most retail investors are buying this up at 100, 110. And that's the wrong way to do it. So we want to get, quite honestly, this is what I was doing, 10 years ago, was acquiring back at 15. Not that I knew that this was, I didn't have any kind of sense of where this was going to go. But, you'd start thinking about like, okay, if there's a tangible asset like silver, eventually this is going to be under demand. And that was a pretty easy trade to make back then. But it was super boring. It just never went anywhere for years and years and years. And you have to be willing to sort of foster that kind of investment for a long period of time before it pays off. But then the other thing too is that you have to be willing to sell into strength. So what I did was on Friday, when things were going crazy above 100, is I peeled off half of my position. And I just said, okay, this feels like this is frothy time. This is stupid time. I can always, buy more back down here if I want to, but let's take some profits. And the other thing too is that I was scaling into long puts all the way up. Mm-hmm. And so I the other day on Friday, as we went down to 75, I actually had some March 75 puts, which went from, it was like some, I want to say I paid maybe 65 cents for them, or $65 a contract. They went up to 800. So that paid for a lot of any paper loss that I had on the remaining positions. So a lot of ways that you can use options to be creative about how you manage a position.
The other side of this, guys, somebody put in there is like Bitcoin and crypto, and that's continued to be taken to the woodshed. And like I said, some of that's liquidity. So there's a need for liquidity out there, especially some things happening in China and everything else. And so where do you get the liquidity? You go to one of the easiest places to get it, and that's Bitcoin, right? And so you see, like, you got Bitcoin up today, but you have the Bitcoin funds that are down today. So you've got like the IBIT that's down $3 today.
Well, it's down. Down $3 because it's dealing with the weekend move. So there was a big nasty weekend move to the downside. Yep. So it's still reconciling that,
pricing that in, right? Same with like Ethereum and stuff. So that's where things are at. Maybe tomorrow it bounces a little bit, but there's a lot of talk that 77, right around 77,000 is the spot. And you kind of got you got your graph there to show it. So that's a good, support level that's sitting there. So maybe this is where it turns, but we'll have to see.
So here's once again, I think this is the structure that you want to look for, and this is why we use multiple time frames and why we use fractals. Because if all you do is just look at the daily chart, you're gonna look at this, blood in the streets and go, oh my God, what do I do with this? Something like this. But if you zoom out and understand what's happening at a larger time frame like this, all this is a monthly swing down. This is not put in a lower high yet. So more than likely what will happen is, no matter what happens, we are going to see some type of rally back up at some point when nobody expects it. When everybody is given up on this, we will see a disbelief rally. And this could either turn into one of two things. This could be the same thing as what happened here. This could actually run into new highs. It's possible because we're still running on a higher low here. The other thing that could happen is what happened in 22. This runs into a lower high, and then the next leg begins, the ABC correction. So either way, you're going to have a decision point here, probably sometime in the next 2 to 3 months, where we'll get this inexplicable rally back up into the 90s. And then you can make a decision at that point. Okay, do I really want to continue to own this asset, or should I just bail on this thing, sell into strength, and move my capital into somewhere else? So right now, selling into weakness is probably a really poor idea, even though it feels good at this point.
Let's see if there's any other questions. No other questions on that. Trying to think what else is getting, even today though, tech is overall, I think it was getting, some stocks were getting beat up pretty good this morning. I think I saw, Tesla. No, Tesla's not too bad. It opened the morning pretty bad, but I'll tell you though, there is rotation that I keep seeing here, and you're seeing a lot into discretionary and staples. Energy, I think, has the potential for a pretty big rebound to catch up to commodities. We've seen GE Vernova crank after earnings. So you just remember there are other asset classes out there, and those are outperforming tech and those ones. Now that may shift, as we just talked about. Tech could be poised to take back over, but to start the year, the tech has not been the leader.
Industrials are starting to. If you look at the XLI, industrials are starting to really take leadership. Tech has been sitting on a sideline. Now this could rotate back into tech, but right now industrials are taking the leadership. We have. Let's see, XLB has been a leader. We have XLP, which is staples, has been a leader lately. So there are sectors that are moving and grooving right now. And so it's not all, we get used to only playing tech. And so here's XLK, which has been dead money now for 3 to 4 months. And so things are moving. There's always things moving in a market. And it's just, it's the shell game, trying to figure out where that capital is going.
Yeah, don't just be careful not to have blinders on to the other areas of the market for opportunity, because there is a lot of opportunity out there in different places right now.
Yeah.
So, in fact, that sector scan that you do is actually just a great way to see that.
We do that every day in our trading room. We come in and say, okay, what's moving today? Mm-hmm. What has been moving? And occasionally what we'll do is we'll go through the different S&P 500 sectors and say, who's the leader here? What should we be looking for? So any other questions today before we're just about out of time here for today's session? But if there's anything else, please let us know. Otherwise, we will see you guys same bat time, same bat channel about a week from now.
Monday's a holiday, isn't it? So we won't be here Monday.
No, I don't think we're at a holiday yet for a couple of weeks.
Oh, maybe it's the following week.
Yes, President's Day is the 16th, I think.
That's right. So we are back next week. Great. The only thing I can say, and maybe it sounds a little bit like a broken record, but let this thing prove itself and break out. We're a little bit of a sell down right now, but I wouldn't be surprised into that, even the final 15 minutes, if this thing makes a run at 7,000 again today. But until it hits it, goes over it, holds it, then this thing's just still in a range. So that's the big thing, is just be patient and let the market tell you which way it's going to go. And I would say again, that 7,000 is a good spot. If it breaks down, to me, 6,800. If it can't hold that and breaks down below that, then you're going the other way. So that's where the dip buyers have been coming in.
Yeah, watch, like Dave mentioned, watch how the markets close every day. Does it close strong, or does it close in a weekly fashion? So
we've got a big sell program hitting right now, actually.
Yeah, so we're down a 15. That's 15 handles, so that's not the end of the world. We'll see. We're still above the anchored VWAP, which is important. Mm-hmm. Okay, folks. Well, nothing heard. We'll see you guys next week. Thanks for joining us, and we'll see you next week.
Bye, guys.
Bye.